just as a quick reminder. So the purpose of this webinar is actually to talk about Workland, about our newest bond issue, which we're placing through BeMyBond platform. So my name is Indra Dargite. I'm here with my business partner, Andrius Sokolovskis, and Igor from Workland, who is the CEO of the business. And we always find that it's more interesting for our investors to hear kind of experiences firsthand. So we try to kind of show the people behind the project also. And that's also very, very important with corporate bonds. Because we find, for example, with real estate bonds, people look at the asset and they assess the value of the asset. But when it comes to actual business, obviously the most important things are the, viability of a business model, but also who are the people behind it. And we thought it would be a good idea to showcase Igor and give him an opportunity to answer some of the questions that you guys raised throughout the placing period. And just as a reminder, there's also going to be a recording of this meeting, so you can view it afterwards, and you can always shoot us questions afterwards also if there's not enough time to maybe answer all of them during this hour. So maybe, Igor, we can start, just with your background. If you could introduce yourself, because, the actual management of the company is in Estonia. So it's probably a bit more remote than, Lithuania. So I think it'll be interesting for our listeners just to hear kind of how you came into Workland. What's your background? What did you kind of bring from your previous experiences to the company, and how is your journey so far?
Thanks, Indra. Hello to everybody listening, and thanks for the good intro as well. And it's a pleasure to be here to represent the company and why are we here today as well. So my name is Igor, as Indra said, the COO of the company. I've been with the company for the past 9 years, but how I have arrived to this position where I am today is, I think, it's a longer history. From one side, I have been extensively in the hospitality and service industry, which at some point actually took me to co-working and serviced office industry back in 2010. So quite soon, my experience within the industry I'm in with Workland will be almost 15 years. And I think that was the key element for me 9 years ago, why the CEO, Indra Kal, asked me to join him and try to build something new on the Baltic market. And that was, I guess, the experience and the knowledge of the, let's say, operational and service industries that I have had. And 9 years ago, interestingly enough, as you pointed out, Indra, that Estonian management and doing something in Lithuania or Latvia or Finland. The funny story is that once we started with Indrek is that our first location was actually in Riga, and then it was Vilnius, and only then it was Tallinn. So it's been an interesting start for us as a brand itself. So I guess this is my background, which has brought to the company the strong kind of operational view and the strong kind of detail-oriented approach and previous experience in the industry, which I guess we can proudly say that has taken Workland to become kind of a market leader, not only in size in the Baltics, but also expanding to Finland, but also in quality. So this has been our key element, what we together with Indrek have been wanted to bring. It's all about the service quality and the quality of the premises and anything else, any part of the business that we do in Workland.
And well, I mean, because I understand you were working for a co-working provider before, right? And then what were sort of the do's and don'ts that you brought? If you can maybe just expand a bit about the day-to-day, and just remind maybe the listeners how the model works in terms of you guys leasing, bigger premises, buildings, and then subdividing them into smaller offices, which are more flexible, and sort of both from the contract perspective, but also just from a division perspective. Maybe if you can talk about the models and sort of what did you adapt, from your kind of previous past experiences.
Yeah, as they say, it's always good to have a past experience to start something new, right? So, but do's and don'ts, I guess, back in 2010 on the Baltic market, if people don't haven't thought about this, co-working as a word was more popularized since 2008. Before that, it was serviced offices, fully serviced offices, etc., etc. So it was still in kind of a beginning stage when it was 2010 and the serviced office or co-working industry has started to come into the market. So it was really hard to explain to the people what it means actually, right? So for a lot of, let's say, people owning or having an office meant leasing an office for 5, 7, 10 years, and that's it. So that's where you stay. So this flexibility in the office market started to be disrupted in the Baltics, I would say somewhere around 2010, because it was a really, you needed to do some effort, put some effort into, selling the product. So, but the previous experience, I think, gave me a lot to understand how people view it and what are they actually seeking and what is important for them, and from that position also giving an understanding that if let's say if there is something lacking, and what are those kind of burdensome maybe service or agreement points that can become more difficult, meaning that, to summarize everything, that co-working is flexibility. And this is what you pointed out, Indra, as well, that the flexibility not only in space, divisions, in service, but also in agreements. So I think, to a certain extent, everybody who thinks like, co-working thinks that, okay, this is only hourly based rent. It's not. You can rent for an hour, you can rent for a day, you can rent for a week, months, years. But I guess majority of my previous experience before Workland actually showed exactly what the customers or the members are, as we call them in Workland, the people who actually come and use the service, what they look mostly in this kind of service. And I think flexibility is the key here, and the quality, of course. I think the biggest that how we adapt, because when we say that somebody is looking for an office, it's not just here's a 2-person office, here's a 10-person office, here's a 20-person office. It is every product or every service is tailored around each client's let's say needs. Today you might have 2 people, tomorrow you might have 4, in a month you might have 20, maybe 3 months from now you have 10 again, right? So the flexibility needs to be there, and this is what we really want to provide to our clients. Of course, from the business perspective, as we're talking about, investors possibly investing into the company, there is also a limit to the flexibility, because we have a business that needs to be sustainable as well. We need to be sure how the business works, and we need to build around it. So in order to get this flexibility, we tailor it around the client. So we know, let's say, the length of the customer, how long they're planning to stay, how big are they going to be, and so on. And I think this is the key element to, let's say, to the previous experience, and also to the quality itself. That why my hospitality maybe kind of experience previously is important as well, that you can treat it kind of a hotel or hospitality business as well, that where customer service needs to be in place, that you are sure that everything is there, that when you go to the kitchen, the coffee and milk is there, you go to the meeting room, everything is working, you just plug and play to the TV if you need to show something, and it can be comparable. And this is why I guess long time ago the term hotel office or office hotel was used, but it's not today, luckily, because that's the understanding of people, that hotels are for short stay, but co-working or serviced offices, it's not about that. So coming to the topics of leasing offices and how the customers or our members are using it, yes, we take away the risk for them of leasing a 5 or 7 year, let's say, premises or space. So they minimize the risk of having these long-term contracts and having the flexibility of being there for 1 month, 2 months, or maybe even years by extending even monthly the contract, right? So the idea of Workland is kind of simple. We not simple, but we take the premises in currently mostly in CBD areas or the most populated areas, the most lively areas. We take the best quality buildings, which could provide um, the benefits of having a prime office, even if you have 2 or 4 people, but also giving the flexibility to the corporate companies. So we take a larger space, we divide it into units, rooms, areas, and the Workland premises always have different kind of setups into the premises, meaning that we have for this kind of community building, we do a lot of these open areas, meaning like kitchen and lounge areas where people can meet, they can network, they can meet different companies, different people, create new synergies between themselves, or just have a kind of a personal contact. And we do have even people, putting together chess clubs or book reading clubs, etc., which is always fun to see how it's organically being created within
A lot of collaboration with the members, basically in the community, right?
Yes.
Yeah. Okay.
But the rest of the premises are actually divided, as you pointed out. It's from 1 to maybe 20 people offices, and we have open areas as well. But I need to emphasize that although when people say co-working and they think co-working, they think all constantly that it's one large room for 100 people, and that's like one person companies, all of them, which might be today there and tomorrow not. It is possible for co-working and these one-person companies, but reality is for Workland that we have intentionally built our, let's say, the whole network in a way where the desks, let's say open area desks or these co-working areas are only make 10 to 15% of any of our locations. Which means that we're mostly concentrating on private office rent. So, and these private offices, yes, then again, one myth is that it's only for small SMEs, right? Small and medium-sized enterprises, which is like 2 to 6 people companies. So this is yes, one large part for us. But the biggest part, I guess, for the Baltics and then let's say our region, let's say Nordics. I think Nordics have already developed further than this, but the Baltics and Central Eastern Europe and all of these regions have been developing quite fast, also from the corporate company perspective. So which means that a corporate company can also be 4 people because they want to provide the flexibility and the ease for their people to come to work and just do their work, and having everything else already solved for them. Is it the coffee? Is it the internet? Is it the cleaning? So they don't need to worry about anything. They just bring their laptop or a computer and work all day. But a corporate client, which has been growing rapidly on the Baltic market, is when we are talking teams of 30 to 50 people. We have had also a company taking 60 to 100 people offices. So it's a growing market and it's becoming more and more, let's say, common in our premises, which means that almost in every location we have one, as we can call, an anchor tenant, right? So which can take 30 to 40% occupancy from the whole premises. So I think let's say the flex office market or co-working is kind of disrupting the whole understanding of how we are utilizing the offices. Traditional offices will stay there, but co-working and service offices are, let's say, supporting this traditional office as well. And this is why a lot of co-working or flex office providers are also in bigger, larger, as we are, in larger office buildings, because clients on other floors who are leasing a 5-7 year lease, they also need to have the flexibility of having meeting rooms, which we provide as well, or having the possibility to put some project teams for a short time basis, or maybe they're renovating their office and they need to switch for a short time period. So I think co-working as such or flex office as such works in synergy with traditional office, and it's only in growing demand by the users and also by the landlords and developers because they see the benefits from both sides and for everybody.
Okay. And just you touch a bit about the clients, right? And it could be both corporate entities, I guess, and individuals. Just in terms of your kind of your revenue split, if you can talk a bit, is it mainly corporate entities? Is it half-half? Just understand, and I understand there is also division between these kind of office spaces, so smaller offices, from 2 to, let's say, 10, 20 people, and then the open plan sort of workstations. But from my understanding, most of the business is actually from the private offices, not from the open plan space rent.
That's a very correct point, and I think this kind of, the space division percentage already kind of gives an indication of where do we concentrate the most, right? So if 10 to 15% is only open space, right? Really open. So that's, desk somewhere in a kind of a more open area. Then over 80% of our revenue comes from private office users. So this is the main revenue stream for us. Then next comes desk users, basically, and also a meeting room is becoming a very let's say not a large part, but over 80% of the offices. Everything else is desks, meeting rooms, and then additional services that we provide to our members within the locations. But let's say a meeting room revenue is also a kind of a high potential for us as well, considering that we currently have 18 locations across 4 countries. We have over 80 meeting rooms, which can be beneficial not only for our own internal customers, but also for external customers. And thanks to the, let's say, the IT developments that we have done, we have our own booking system, booking platform, which is really easy to use. Few clicks and you can book a room in any of our locations. Come and use it during the business hours or outside if you can agree with the locations. So there is, yeah, that's I guess the split, but
So you also have a new sort of potential revenue, well, bigger revenue stream, let's say, from just renting out not to the Workland members, but to external parties who just want to have meetings. Basically, they need kind of board meeting space, right?
True. And we just also launched, let's say for the desk users as well, the opportunity to book a desk for a day, which we just launched it like a month ago. And Latvian market was the pilot market, which we did, and all of a sudden the feedback we got was that all of a sudden new people started coming in and who didn't even know about this product or use this product. So this kind of IT development part is also important for us because this gives us the possibility and the advantage to grow further and provide those services in a much easier way. But in the end of the day, yes, the majority of our revenue comes from the private office rent. Is it 2 people or is it corporate companies who are renting 60 desks? So, this is an ongoing kind of concentration for us as well, to keep on doing this, and then it's also more concentrating more on those corporate companies and looking for them because even Nasdaq, for instance, who has been a client with us in Vilnius, actually, they needed because their own team started growing that fast. They needed for 1 year to put somewhere 60 people. So, if a company like Nasdaq can come and use our services, considering their security policies and all of those things, means that co-working or a serviced office is very secure as well for companies like that. But overall, corporate companies globally who have those HQ offices typically in city centers, they cannot cater everybody's needs in their teams. And this is why those companies are also looking for more flex opportunities because you never know. Today there is 100 people, but tomorrow there is 50 people maybe. But that goes already also towards this hybrid work approach as well, where you have less desks than people in the team.
Yeah, I think, and also what you're talking about also reflects what we're seeing also in the real estate market with the tenant preferences. That actually, I'd say probably just before COVID, open spaces were the thing, and it was very, very popular. And obviously, then companies face huge difficulties to divide the space and manage the personnel during the COVID time. And now we see almost a switch back to smaller sort of offices or office spaces where they're dividing the teams into twos, fours, six, kind of again like a cabinet structure. And that's very much kind of prevalent in the current market, coming back, well, maybe not to the cubicles, but to the smaller, private offices. And maybe just if you can talk a bit about the locations, because it's interesting, for example, in Vilnius, I think you're very highly concentrated in Constitucijos Avenue, because you have locations in Quadroom, in Buras, in Flow, which you recently opened right in September. Just to understand, how do you choose a location? Kind of what are the factors? And, let's say if you open a location next to Buddhas in Flow, does that affect the occupancy of that location, or is it just an addition and sort of that area is so crowded and there's a need for office space that you'll just be opening more in the Constitucijos Avenue?
Yeah, I think it all matters. Depends also on the size of the cities, right? So we all know the Baltics are not that big, so our cities are not that dispersed over larger areas, right? So we typically have an old town, we have a kind of a central business district, and then whereas in larger maybe European cities, Western European cities, the city is dispersed based on regions, and you got the financial district, you got some other like more embassy districts and so on, and people tend to choose based on this. But in the Baltics, I think for us, the main kind of target has always been the kind of CBD or the old town. And why? Because I think this is where the majority of the people concentrate when they want to go to work, right? So we do have a lot in Constitucijos, but we have one location in Gedimino prospect and also in Didžioji, which is maybe for some seems like, it's a little bit like really cities like Old Town, and it's like hard to access it. And do we have clients? And that location has always been full, 100%. Because I think, and that's not a new building, right? It's a historic building, which we used to be a bank building. In the first years, we started expanding heavily, like 2018. Let's say, opened 3 locations in 2016. 2017, we kind of looked at how the market reacts, and from 2018, we started really kind of expanding, right? So we started doing a lot of more mixed use in that sense, that co-working and private offices, because the previous ones were only private offices. The first 3 locations, and from 2018 we decided that we're going to do co-working as well, and we will do it on a different level. And funnily enough, in 2018, I think the majority of our locations which we opened used to be old bank buildings, historic buildings, so somehow targeted those, but then it was mostly kind of, those buildings didn't have a purpose. They lost their purpose, and the landlords didn't see how they could actually utilize those buildings and how can they bring life back to the premises or to the building. And interestingly enough, co-working worked. So by, changing the concept or changing the approach of the bigger building, of an older building, and making it kind of a cool, trendy office premises with different opportunities, different areas in the premises, like meeting rooms, lounges, small breakout corners, offices, co-working areas, open ones. So this kind of brought life to it, and people wanted to be there. And due to this kind of segmentation, that we all of a sudden could, provide flexible services for offices in those kind of interesting buildings, brought a lot of people to them. So it's interesting that from one perspective, we like those old buildings as well. It's harder to, maybe it's more complicated to refurbish them.
Divide the spaces, I was going to say, because that building, I mean, the ceiling height is probably, I don't know, 10 meters, no? Like it's quite high, because then you have to subdivide it into different floors and stuff. So it's not that easy.
It's not easy. It demands a lot of work, but once you do it, you can create a very, very kind of character environment for the people to use. And they, especially in Didžioji, when you go to this kind of the big room and you're just like amazed by the ceiling height, by the old heritage protected ceiling paintings, right?
Yeah.
So it gives a different kind of usage for the building itself. But that's one way of approaching this. But at the same time, we always concentrate on those lively areas. Let's say Detroit, very lively area, a lot of cafes, a lot of things to
Yeah.
do. After work, you can just go out of the office and go have a dinner or some drinks, whatever else. Or the other areas where you also have life, and because in the end of the day, we spend quite a lot of time in the office and at work, and it would be nice that once you get out of that environment, you can actually do something else as well. Is it a gym? Is it you need to do grocery shopping, or you just want to meet some friends in a cafe? So you have that opportunity. So we have been concentrating mostly on those areas.
Hmm.
But at the same time, Constitucios, all of the buildings, well, besides Buras, which is a little bit older, but still a very good and prestigious location and a very good building. But we also have Quadrum and Flow, which is, let's say, within the last 5 years, you can consider them as completely new ones. That what is becoming more important for us as well is the sustainability, right? So the three magic letters that all the companies are trying to use, ESG, right?
Yeah.
So that you need to have some plan and you need to be sustainable and think for the future as well. So and we want to kind of support this because we also have an ESG plan and we also measure our CO2 levels and like to make sure that we manage the business sustainably, which is being provided by the newer projects and developments on the markets as well. Because I think the future is about sustainability as well, and we all need to bear this in mind. How, let's say, even what kind of lighting is in the offices, right? Is it LED or it's some older stuff, right?
Yeah.
So, but even in older buildings, we try to build it as sustainable as possible, making sure that the landlord provides also the sufficient systems in order to support technically the building and the premises in the most sustainable way. But it's becoming more and more important also for the customers, for our members, especially if we again mention the corporate companies, because those companies also have ESG plans.
Yeah, they have a sort of agenda that they need to satisfy and targets to abide to. So it's important for them to be in these type of offices also. Yeah.
Sometimes it's even already in the inquiry for the office that does the
Mm-hmm.
building have some kind of certification, right? So if
Mm-hmm.
it's not BREEAM or LEED,
Yeah.
then they will not even consider that. But I think it goes hand in hand, and of course we want from our perspective we support the movement towards sustainability, and it's important for us as well. So kind of to summarize your question, it's important for us to be in a lively area which can provide the people a very
So at the
different.
CBD or also Old Town area, right? But can I ask about the parking? Because I think I mean, what's the sort of status? Do your kind of members require the parking? Yeah, or is that not part of the criteria, when they're choosing offices? Because, these locations typically they're not ideal if you want to come with a car. Yeah.
And that's a good, interesting question. So so kind of to touch upon the previous point, the CBD. But if we look at Helsinki, then we have Helsinki is dispersed also into different areas, which which collect different kind of companies. So basically, everybody considers their CBD something different, right? But in the Baltic market, it's a little bit different. But regarding parking, interestingly enough, the old town locations we mostly have the least parking demands. Sometimes we do have a lot, let's say in Gedimino Prospect office, for instance, if we talk about the Vilnius market.
But
But
not for the joy, right? Because I guess people just kind of live nearby and they just walk to the office. That's the case.
exactly.
Yeah.
And that I think what defines also co-working or flex office, because having those different locations, like satellite locations or different areas, gives the opportunity for a lot of companies and for a lot of people choose based on, let's say, their commute time, because everybody understands today work and life balance is important. And if you commute to work for 1 hour, which was the, let's say, the Nasdaq kind of approach or the concept, why they started considering choosing flex offices. Let's say if we think about London as a city, if you have a HQ in the city center and everybody commutes 1 to 2 hours, it's a long time to commute for
Yeah.
work. But once you do satellite offices around the city, closer to the people's home, it decreases the time for commute, and the people have the flexibility to choose the location based on the, let's say, how close they are in order to, balance out their daily lives.
Yeah.
And then this is why parking, interestingly enough, is not that important.
Not a big of a factor, right?
Not a big
But
effect.
actually, I was going to ask, like, in terms of the different locations, but also across the countries, right? Because, are there any kind of differences in terms of preferences of your members? Because, you can compare the four countries, Lithuania, Latvia, Estonia, and Finland. I know just from the numbers that I think Lithuania is kind of the highest contributor, to your revenues. So is it because actually physically you have more locations and more kind of product offering, or actually there we are more prone to using these co-working spaces, and sort of maybe locations are better? Just interesting your comparison also across the sort of client profiles in the countries. Are there any differences, or we are very similar? Because we'd like to think we're different, but maybe it's similar, yeah.
Well, when it comes to Lithuania, I think we all know that the current kind of economy situation is as it is, with all the bank interest topics, and all of those things have influenced quite a lot, let's say, companies and people's decision making, even if it's taking an office. But I guess Lithuanians know as good as any Baltic or Finnish people that Lithuania has, we can say, that done the best in the current kind of economy state.
Yeah.
That I think the country has done a lot of work, or the government, or the old associations and institutions who have worked for it as well, to keep the market active. And I think that's the most important part. I think it was this year at the Estonian like Nordic real estate forum in Tallinn, where someone said very well that even in turbulent times, don't lock up your wallet, keep on doing business,
Yeah.
because this is, unfortunately, we need to say that money is something that's going to keep the wheels turning. And I think Lithuania has managed to do it in the best way. I'm not saying that Latvia and Estonia and Finland has done it worse. It is just a turbulent time, but as we all know, economy is a cycle. So let's say, due to the reason that the interest rates are falling, then 6 months later, people have more free money in order, which they don't need to pay under interest, and decision making will start growing, and pretty sure that the economy will start growing as well. So I think Lithuania has done, let's say, from our network as an economy room, has done, let's say, better as a country as well. But from the market perspective, as you said as well, you pointed out that for Workland, let's say, the splits of let's say, revenue is larger from Lithuanian market, but we also are larger on the market. So let's say, if in Lithuania we have around 1.2 thousand desks to be provided on the market, Tallinn is the closest one with slightly below 900. So there is a difference of already 300 desks.
Sure, in terms of product offering, yeah, and supply side.
So the supply is bigger, but due to also the kind of, as I said, the market itself, and maybe also closer to the Western Europe, getting the influences from the Western Europe more faster, the uptake or the understanding or the education of the markets towards this flex office and co-working has been better and bigger, because again, also I think Lithuania or Vilnius as a market has more, let's say, service providing as well. So like
Sure.
and this kind of educates the market. So we are big in that sense. We have 18 locations. We do have some competitors on the market. It's still kind of, in our region, I would say, it's still kind of in a growing phase. It is I think the market penetration right now in the Baltics for the flex office is slightly above 2%,
Mm-hmm.
comparable to London, which is 10%. But London is a big city as well. But let's say bigger European cities have a, let's say, penetration of 5 to 7%. So there is still room for growth, but it also demands a market education, which we feel that we need to do still in our region quite a lot. And by our growth, we want to kind of do that as well. So yeah.
What is the kind of what are the more challenging things, you know? Is it like you said, the knowledge and the sort of the customs of, you know, your customers, your clients who need to understand the concept and kind of buy into it? Is it the competitors? Because, you know, obviously you then probably compete, you know, well, for price, for service. You know, what are the challenges that you're also facing? Just so it's not just all so rosy and nice, but you know, what are your headaches at the moment?
Um, I think the headaches is actually, let's say, the main headache is that we would like to for the market to let's say acknowledge the
Mm-hmm.
difference between a traditional office and a serviced office or flex
Yeah.
office.
So it's the education part basically to educate
Yeah.
your future clients.
I think
Mm-hmm.
let's say the primary thing that
Mm-hmm.
requires to be done because again if we look at the market penetration, if it's in London 10% and in the Baltics it's 2.5, and the predictions by JLL for 2030 that the market penetration should be 30%, which is of course maybe exaggerated, but the
Mm-hmm.
market is moving there. But in order to achieve that, let's say market penetration of people choosing having the ability to choose flexibility, flex office versus traditional office requires a lot of market education. And from that perspective, of course, competition is actually a bonus for our markets because
Mm-hmm.
the more there are, the faster the education can happen in that sense. But of course, in the end of the day, we need to acknowledge as well that if there are more competition, then there are more service providing, more different, let's say, packages or benefits in that sense.
Mm-hmm.
And then it also requires education because you need to educate the people about the difference. How do you compare to somebody else on the market, right? So especially if people start looking at the price. And then for us, it's important that we concentrate on explaining that even if the price might be in certain cases slightly higher than our competition, our service providing and the benefits that we provide and the flexibility and the quality is, let's say, it's the most important part for us. So we want to provide the best service there is on the market, comparable to anybody else. So and provide it in a very flexible, in a very quality and flexible way. Sorry.
Mm-hmm. Okay. Okay, and then maybe just to then come back to the bonds. So, as just as a reminder, we're issuing bonds for Workland. At the moment, we're raising 1.5 million euros, and basically with the terms of 10.5% annual interest, with the coupon paid semi-annually or the interest paid semi-annually. Why do you need the money, Igor? Like, how are you going to use it? Because, clients also ask us question quite a lot because we state that it's for refinancing purposes, to consolidate the external debt. So just to understand, I think you can mention maybe that you guys have a loan from this Lithuanian government fund. Maybe if you can talk about that just to give clients perspective, I mean, our clients to understand what sort of money needs to be refinanced.
Yeah, so we did take a loan from Viva, so in order to finance
Mm-hmm.
our growth, because already back then we, together with the shareholders, understood that the company is in the position and the size where we can take external loans, and we don't need to depend on the shareholder loans
Mm-hmm.
or investments. So we took a Viva loan, and then right now, together with the bonds, we want to refinance it to,
Mm-hmm.
be able to have a more, let's say, better conditions based due to the, let's say, the loan that we had with Viva, but also not only to refinance our external debt, but also our future growth, because we do have a location coming up next year as well. And then we feel that having this kind of bond issue will help us restructure our approach right now in a better way for the next years. And then also, as we have pointed out already, it's also an interesting approach where we can give the ability for our own members maybe to be part of something bigger, and this is one way of doing this. And definitely the plan for Workland is still the same as it has been. We have been growing over almost 40% annually for the last four years since COVID, because it has been kind of a good point and good timing where Flex Office is growing, and then we will keep on growing as well. And I think issuing those bonds can help us grow it further and stabilize even the business even further. By, let's say, already refinancing and also being able to cater those loans that we take.
Okay. Yeah, and also another question that we receive, and maybe I can answer it myself actually, just because we have these discussions. Why not bank financing? Because just due to the structure of the company. Workland is an international company, right? Because there is the Estonian holding company, and then all the other companies are subsidiaries. So Lithuanian entities, Latvian entities, Estonian entities, and Finnish entities are under this Estonian holding company. So unfortunately, at least in Lithuania, I'm not sure, maybe Estonia is slightly different, but the banks, they only like to kind of finance local businesses, and they really, don't have a preference for the funding to be used abroad, across the borders. So, for example, in this case, we are issuing bonds on the Lithuanian entity, which will use that across the group. So it will lend money to the Estonian holding company, and it'll be just utilized at the group level, not necessarily just at the Lithuanian entity level. So that's one of the factors actually why Workland is actually, instead of using traditional kind of bank financing, is using alternative financing with bonds. Another one is obviously what you mentioned, the growth aspect, because when the company has been growing so much, obviously now it's hitting the stage where it needs to stabilize all the centers that it sort of acquired or opened in the past year and a half. And that means basically ramping up the occupancy levels, right? Because for listeners to understand, when you open probably, and Igor, feel free to challenge me if I'm not correct. I'm assuming the opening occupancies are probably around 50%-ish, maybe slightly less when it's a new location, because you need to ramp it up then to at least like 65, 70 and above, for it to be profitable, to be stable. So I think the company is also at the stage where it opened a lot of these new locations in the past year or so, and now it needs to stabilize the occupancy levels and the revenue flows.
Yeah, that is great. Thanks, Indra. And based on this, I think I'll jump back to the question that I missed before. I asked like if is it okay if we're in Budas and Flow next to each other and
yes, yeah.
So it is. Let's say it is supported by the mentality that the global markets have, right? So if JLL is predicting 30% penetration by 2030, then it actually requires basically, or what global leaders are saying in this industry or the real estate industry as such, that 20% of each building should have a co-working. So basically, we are supporting this trend already, right? So there is a co-working in Budas, there is co-working in Flow, because we're supporting the synergy within the building. So there is no kind of, if you think like cannibalization of each other, because we do have the occupancies there. And I think Vilnius has been a very good kind of, again, let's say, example of where we open a location, as you pointed out, and we have an occupancies of, let's say, 40, 50, 60% on opening date, which is a very good position. but it also depends on the market, and it also depends on the size of the center. Sometimes it can be 25-30%, which is in accordance to our business plan, typically that we want to open with at least 25-30% occupancy. If it's 50-60, like some of our locations show, that it's already an amazing number. But we always predict very kind of a fast-paced ramp-up period, which we want to achieve, let's say 85%, 90% of occupancy within the first around 10, 11 months. But by opening at 50-60%, you shorten it, but basically by half almost.
Sure.
And as from the business perspective, as you already mentioned, that indeed next year we do have one location opening, so we are kind of stabilizing the business right now. We are not heavily expanding the next year, so our aim is to kind of go into full kind of optimization and efficiency mode, and stabilize the locations that we have, and in order to provide those the revenues and the profits that we target as well, which I guess are in the information memorandum as well that's provided. So this is the aim. So we have been growing fast, and maybe faster than, let's say, the average global trend, but it's all in the purpose of educating the market, having the position we have, and then having the stronger kind of brands behind it. So
okay, good. Maybe I can address a question to my colleague Andres, actually, because again, one of the most frequent questions we receive is about the security of bonds, because obviously it's slightly different, that it's not real estate backed. There's kind of softer collateral arrangements and guarantees. So maybe Andres, you can walk through sort of the security levels and the financial covenants of these bonds.
Yes, sure. So as Sigor mentioned before, also that during the last 5 years, the group was expanding very fast. So basically, revenues were increasing by 30% annually, and the group was opening all the centers that currently are 18 in total, more than 30,000 square meters operating, and all those investments having been done by the shareholders and partly by also Viva loan, which was also mentioned. So the thing is that how we look to all this structure and security, that basically the bonds will be only one external financial debt. So at the group level, so meaning that all the revenues and the revenue streams will be in a way locked, as all the Lithuanian operating centers, which are 6 in total, will guarantee for the bond issuance, and also there will be a guarantee from the holding company, meaning that all the revenues and streams from the operational activity will be focused and locked for the bonds. So basically, we will also, so from the security side, so the issuer will pledge all its assets. The current value of that assets is 1.3 million euros, and all the assets of the group, and the group will provide the guarantee, more than 6.8 million. So that's from the security side, and then from the financial covenants, we will also have that. So it will be applied from two perspectives. So basically, 2 levels. So one level is Lithuanian consolidated. So we will have equity ratio more than 30%, and also interest service ratio, which will be more than 1.5, and at the group level we'll have equity ratio not less than 20%, and the interest service rate not less than 3 times. So basically, having all that in mind, so I think that it's very good that it will be one external financial debt on the group level, and we will have all those cash flows locked. Another thing also on the Lithuanian side, so basically all the 6 centers are profitable in terms of EBITDA. So basically we have 500,000 of EBITDA every year. And on the group level, so after this very fast expansion, now all the EBITDA will be stabilized, and we see that for the next year it will be not less than 1 million on consolidated level.
Okay, thank you. And what would you say, to the investors who are kind of, I always find it a bit kind of, well, not funny, but makes me smile when we do a lot of real estate back issues where people are asking us for diversification, but then when we provide the corporate bonds, people are asking for real estate collateral. What do you think these are sufficient sort of arrangements, let's say, and sureties? To cover for that, because obviously the business model doesn't have real estate ownership, right? Because Workland is just leasing the premises. But from the business standpoint, is there sufficient? Do you think this is a sufficient level of security that that we can provide to investors, and can be comfortable with that, or is there anything more that we can provide?
That's a question to me, right?
So no, to Andres, yeah. Just,
Okay.
or Igor, if you want to pitch on, you can also, but just maybe for Andres from the structuring standpoint.
No, I understand. So I think, just a kind of small comment that I understand that securities are different, but at the same time, I think the market or the industry itself, and then our, let's say, ongoing kind of belief in the company and the what we have built in that sense should give a kind of a strong statement that we are with all of our hearts in the business, and we see that there's a bigger future. And I think also important to state out, I didn't mention this during the call, is that during these 9 years, we have acquired 3 competitors, which we can say were in financial distress, and we turned them around, even if we, needed to, unfortunately, close some locations and consolidate the clients by taking the clients, taking the revenue, and building a more steady and more and a profitable business out of it. And I think we have done 3 successful acquisitions, and based on this, let's say the Finnish business is still kind of in ramp up period for us, but it's on the perspective of reaching where we intended it to be reached. So.
And just maybe also just if you could also mention the shareholders of the business, and their financial standing, just to remind the listeners.
Yeah, so basically 80% of the group is owned by BaltCap, one of the private equity funds, and they have already invested in all this growth more than 6 million euros. So their belief is really very big in this company. So and now this all group reached level where also external financing can come. But of course, the BaltCap fund will support company and look after during all this period. And also to your question about the security. So yeah, I mean, yes, well, hard security always matters, always for retail, especially for retail investors. But just to understand that here we have all the business in a way pledged or locked, which has been already developed during the last 10 years. So basically, all the group is the revenues are more than 9 million euros, and they are predictable. I mean, those all centers, 18 centers are opened. And we see the occupancy rate, which in 2023 was more than 80%. Of course, some of those centers were being opened during, every year. So for each center, there is also a time period to catch up this occupancy rate. But what we see that next year it will for sure will go up to average 70% and more. So basically, this revenue also is coming not from those, let's say, seats, working seats. It comes more than 80% from those smaller offices that are being rented. So it's also quite predictable revenue. So yeah, I mean, just to understand that not only hard collateral determines the risk. You have to also to look into the at what stage the company is and how predictable cash flow, and if there will be any other investment needs, and overall how much debt there is on the group. So in this level, in this particular project, so only the bonds will be external debt, which is also mitigant.
So basically, comfortable level of debt, basically, for
Yes.
the company. Okay, cool. Okay, so thanks a lot, guys, for sort of telling the story and the details. Just to remind also the listeners and whoever will be listening to the recording also, you know, we're here to answer any additional questions from you guys. The offering will last until Friday night, literally probably till 12 o'clock at night, because it's a system. So it's programmed to kind of finish on that time. Yeah, and thanks a lot for supporting us and for people who already invested. And you know, we look forward to speaking to you. Thank you.
Thank you very much.
Thank you.
Have a good day.